Hey, greetings and welcome to our YouTube video. The focus of this video is to show you how to make decisions in the BSG simulation game, and we are doing the final year, which is year 20, but this is just a review to show you the decisions we have made and how we were able to be top in our competition. As you see, we are company E this here right at the top. As you see here, we were ranked number 1 with an investor expectation score of 119, base in industry score of 90, an overall score of 105, and 5 bonus point with an overall GTD score. This is game to date score of 110, which is the best in the industry. So up to this round, we are the best company, and this video aims to show you the types of decisions we made and how we were able to come to finish this top. So this is the page where we'll make our compensation and training decisions. But before we start, it's always important for you to evaluate the comparative competitive efforts report. So our main competitors are company A and company B, because I think A was number 2 and B was number 3. As you, the SQ rating for company A is 7.7, while for B is 9.8. Ours, company E, we have an SQ rating of 8, which is in between these two. When you look at the market share, we don't have a larger market share in North America because we have 19.3, B 13.6, and we had the list of 11.3%. The same applies in in Europe, Africa, where we had an SQ rating of 8.1, company A 7.7, while B 9.6, because these are our main competitors. Model availability for company A had 498, company B 500, while we had 500 also. So let's go to Asia Pacific and evaluate the SQ rating. You realize that in all this company maintain a similar SQ rating across all the regions. So like company A had 7.9, company B 9, while we had an SQ rating of 8. Then what about in Latin America? So in Latin America, company A 7.8, company B 9, company E, which is our company, 8. So after evaluating this CCE report, I think we have an idea of what other companies are doing, and we can kickstart our decisions. So it's always important for you to start with compensation and training. And under compensation and training, you should always set the base wage, the incentive pay, and the fringe benefits. So I've not been offering fringe benefits and incentive pays from the start, but maybe I'll decide to offer them at this round. But what I focused most on was the best practices training, because the impact of the best practices training are always cumulative. So you have to invest more at the start of the round, and then you can shed a little or drop the amount you invest in best practices training towards the end. And I'll show you how I was able to do this. So of importance in this page is for you to mark the minimum wage, like in Asia. So I'm only focused on Asia Pacific and Latin America, because I viewed that production in these two areas is cheaper compared to North America and the Europe Africa facility. So I sold all the capacity in North America, invested more in Asia Pacific and Latin America. So the minimum base wage in Asia Pacific is 13,124. Without initiating a change from the previous year, we have compensation of 15,839, which is a little bit more. So I think we won't offer any increase in the base wage. What about in Latin America? We are currently our total compensation stands at 16,523, while the minimum wage is 13,124. So what we'll do, I think we'll just add 1%, maybe a change of 1 or 2% in both areas. So this comes to 16. What about in Latin America? We can also decide to increase our base wage by 2% from the previous year. So it gives us 16,886, which is not bad. So we won't offer any incentive pay, but I also overview that because this is our final round, maybe we can offer some fringe benefits like the not the fringe benefits per se, but the incentive pay, maybe the least 0.25, because this will enable our workers to work more and give us quality products. So I think we can offer an incentive pay of $0.25 per worker, and then we won't offer any fringe benefits at this round. But now we'll come to our best practices training. So I think we can max this for this before we drop it down to see the impact. So the maximum is 7,500. We have the maximum, so you can see the material cost impact. Like in the Asia Pacific facility, with the maximum we have negative 2.545 for the superior materials. So maybe we can drop this up to the point where we see a change in the impact, so we'll maintain it at 5,000. What about Latin America? Also we can decide to drop up to where we have a change from the negative 1.8. Let's see. So the minimum is 4,000. So we invested highly at the beginning of the round, like the first 5 rounds. That's why right now we can drop and still be able to achieve the same impact on standard materials and the superior materials. So supervisory compensation, I think we can add 1 or let's say 2%, similar to what we added for the employees. With these decisions, we are through with the compensation and training page. So maybe we can decide to save on these decisions. So save, sorry. We can go to the next one, which is branded production. So under branded production, our decision was that we'll maintain an SQ rating of 8, the one that we had in the previous round. So let me max the TQM, because TQM is always important in allowing you to reduce the reject rates in your product, like improving the skills and capabilities of your employees, and also acquiring the necessary skills and equipments for you to produce quality products. So maybe I want to maintain an SQ rating of 8.0. So let's drop this up to where we'll have 8.0. So I think 2.9 is okay. We'll also do the same in our Latin America facility. So a TQM of 3.4, it's okay. We'll maintain our models at 500, no problem with that. And then on the pairs to be manufactured, I think we'll come to this later after we made the decisions. But I think with the we won't feel the anticipated year 20 material prices, standard materials, because I've not changed anything with our superior and our standard materials. So we have maintained the same percentage of 60 for the standard materials and 40% for the superior materials. So I'll leave it that way. Next, I'll go to our, maybe we can save the decisions here. Yeah, we can make the save. Then what we'll do next, yeah, we have an SQ rating of 8. We maintain that. So we'll go to the wholesale marketing page. So for the wholesale marketing page, as you can see, our operating profit margins are almost the list is 29.6, which is almost close to 30, while the rest are above 30. So that's a good indication. What we'll do, we'll try to change some decisions here with the focus on our brand advertisement and retailer support. We had the brand advertisement at maximum in all the markets. Retailer support was also high, but we can evaluate what our competitors are doing, and that's decisions what investments company A and company B are making for brand advertisement and the retailer support So Let's go. So we can check company B. Brand advertisement, they're spending 30,000 while company A 29,000. So we are not far off. We are also spending the maximum 30,000. That's in Latin America. What about retailer support in this area? So when you look at retailer support, company A and B are not spending anything on retailer support. We are spending almost 4,000, which is not bad, while the industry average for retailer support is 23.89. Okay, let's go to the next market where we have the Asia Pacific market. So Asia Pacific market brand advertisement, company A and B are also spending maximum. Company E, we are also spending maximum. There's no problem with that. What about the retailer support? So company A invested heavily on retailer support while company B never invested. Well, we invested some 3,000, but the average is 33.61, as you can see. What about the other market, Europe, Africa? So when you evaluate the Europe, Africa market, you realize that the brand advertisement company A and B also maxed it at 30,000 in those markets. We also did the same. So what about retailer support? They never invested in retailer support while we invested 3,000, but the average is almost 27.50. In Europe, Africa, no, that was Europe, Africa. Now in North America, company A and B brand advertisement, they also maxed that up. While retailer support, company A did some investments in retailer support while company B did not. And we also invested some, but we are focused with the average, which is 34.17. So we can go back to our decisions under wholesale marketing. I think with brand advertisement we'll maintain it because you should check on your net profit, because once we reduce the retailer support, our net profit also drops. So I think in all the markets we'll maintain it that way. So the maximum is in this market will drop a bit to have the maximum net profit. What about here? 9,900. So 332,900 is the 333. So we'll maintain it at 27,500 in the Asia Pacific market because that is the value that gives us the maximum net profit. What about in Latin America? So yeah, we'll also drop this to 29,000. While the retailer support, because this eats so much into our net profits, because once we reduce them, we'll have an increase in our net profit. So I think we'll just make decisions to be above the average, like in our North America facility, we had an average of 3,417. So maybe we can decide to be a little bit higher than the average, than the industry average. So this will bring us to, it was almost 35, so we can go with 37.50. So what about in Europe, Africa, the average was about 27.50. So we can maybe go with 32.50. That's not bad. In the Asia Pacific, the average was about 3,300. So can go with 37.50. We are still way above the industry average. While in the Latin America, we had almost 2,400. So I think if we go with instead of the 2,400, we can go with 3,000. That's not bad as our investment in that market. So we never change our SQ rating, but because we are towards the final of the towards the tail end of the game, maybe we'll expect a minimal increase in the SQ rating so we can fill our competitive assumptions. So maybe 7.2 in this market, 7.2 also in this market. The models availability will also, maybe we can say they'll increase, but not that much. 439, 459, 374 to 394. So wholesale price, because I don't think I'll change my price, so we can increase also a bit. 64 to 65. Instead of 63 we go to 67. Instead of 66 we also go to 67, not 68 but 67.2. Brand advertisement, I think we increased, we will also increase a little bit, because we don't expect people to invest wildly in this final round, so that's what we'll do. So rebate off, I think this will be around 5, so we go with 4.9, something close to 5, 5.10, not bad. 4.8, and here 4.8 also. So delivery to 1.9, because people will aim, the less delivery time you have, the more demand you'll create. So we can drop this maybe to around a figure of around 2, so 1.9 is not bad. Retailer support will also increase maybe a little bit, despite me dropping most of the retailer support I offer, because I just wanted to be above the industry average. So instead of 23 will come 24. Then I think we can go and set our decisions on price. So I think we'll start with Latin America and Asia Pacific. The impact of increasing the price, let's see. 5. So I think we'll increase that to 73, because that is the value that gives us the maximum profit, net profit. In the Asia Pacific market, so we'll drop this to 68. I don't think that will have a bad impact, because when we drop the prices, when we have more net profit, so I think we can just drop the price. What about in Europe, Africa? Because in North America and Europe, Africa, I'm not producing in this area, so I'll always have to be a little bit higher, charge higher compared to the Asia Pacific and Latin America, because these are the areas I produce, and I have to uh, offset the transportation cost from the products I export to these areas. So instead of 69, maybe I can increase this to 71. That's not bad. So also increase this to 71, but in Latin America 73 is so high. So let me drop and see the impact. So previously it was 70. Yeah, if I drop, I see, okay, let's do 69. That's not bad. So with those decisions, I think I'm done with the wholesale marketing. I'll go to internet marketing as my next decision. So I'll increase this to at least 40. 41 is not bad. Okay, 40. Then we'll drop this to 40 also. 40. So like your retail price should exceed the wholesale price by at least 40, for you to avoid the product competition, like for you to avoid people buying so more from the internet sales, from the internet, instead of going to retailer, because you want to also maintain the retailers. And then on search engine advertisement, I'll also see how much other competitors are investing in the market. So let's go back to our comparative competitive efforts report. So that was our search engine advertisement. So 2020, I'm investing 18 to 50. So most had 20,000 in the North America market invested in search engine advertisement. So what about Europe, Africa? 17, while I had 16. So most of my competitors said about 17,500 in the Europe, Africa market, while I invested a little bit compared to them. So in Asia Pacific, search engine advertisement almost They were also higher, 18, 19, about 18 to 19, while I had Asa's company here had almost 6,250. So in Asia Pacific, they had that figure. So in Latin America, let's see Latin America search engine, they invested highly also, while we had little. So we'll do the same. So let's go back to our search engine advertisement. Maybe we can boost this up instead of 18 to 50. Maybe we also max it up before we start dropping it. In Europe Africa market, the average was almost 17,500, so we can go with maybe a little bit higher, 18. And something fun is that as we increase our search engine advertisement, our net profit also increases. So maybe let's max up in all the areas and then see what the impact will be after we start dropping the values. So 324. So the value to 20, and then we'll start dropping this 323. So I think the maxing in North America is fine because this what gives us the highest net profit. In Europe Africa, 240. So 323 to 282. So this investing 19,000 in search engine advertisement is what gives us the maximum net profit. So I think we'll maintain it that way. Let's see Asia Pacific market. 4, 6, 7, 8, 9. 25. $29. So I think we can, for search engine advertisement, maybe we'll go with the average for Asia, for the Asia Pacific market, which was about 18,750. So because we don't want to have zero invested in search engine advertisement despite it giving us the highest net profit, so I think we can go with the 19. Let's say 19. That's not a bad figure. What about Latin America? So the average in Latin America was also about 19, so I think I'll go with that 19. So these are the decisions, and I also have to fill up the competitive assumptions. I'll increase the price maybe, because these are only assumptions, like our perception of what other people will do in the market. To expect prices to increase, we expect people to increase their investments on search engine advertisements. So I'll increase a little bit, not that much. And then on free shipping, we can confirm. So we had no one doing free shipping in Latin America. No one was doing. Okay, we had 3 people doing free shipping in Asia. Okay, so in Europe Africa, did we have free shipping? Yes, one in Europe Africa. So in Europe Africa we had one. What about North America? We had no one doing free shipping in North America, so we can say like we had none in North America. We had few because we only had one. We can say most in, and then maybe few. We can do few in these areas where we had none. So before you make a decision for free shipping, maybe we can play with the decisions and see which one gives us the positive change in our net profit. So 321, now it drops our net profit 16 now. So yeah, it will increase our net profit, so we'll go with the no. So with the no also in this area. So I think we are through with our internet marketing. Next is we'll go to distribution and warehouse. Maybe we can save the decisions we have made in those other platforms. So first you have to zero in all the markets before you start your decisions on distribution and warehouse. Then you can check the demand, like we have a shortfall of negative 4340 in Latin America, so you have to satisfy the area first. So 4340, maybe we'll go with 4400 in that area. 4400, we have a surplus of 28, so maybe 4470, because we want to have a surplus of about 100, so 98 is not bad. Then the rest, we'll ship the rest to North America, because we have a free trade agreement between Latin America and North America. So this will save on the tariffs, transportation tariffs that you could be charged. So we have transported the rest to North America. Our next decision will be to satisfy the demand in our Asia Pacific market. So the demand in Asia Pacific, as you can see, is negative 3083. That's our shortfall, negative 30, 38. So maybe we do 3150 and see. So 3150 in this area, we have a surplus of 44, maybe 3200, because we want to have a surplus of averagely 100. So 94, that's not bad. So in the Africa facility, we have a shortfall of negative 3138. Maybe we do 3250. Let's see 3250, the impact of 3250, this area. So still negative 200. So instead of 3250, we do 3550 to satisfy. So we have a surplus of 2. We'll still need to add more, maybe 3650. 3650, surplus of 102. Yeah, that's almost 100, but let's do 3645. I don't want to surpass the 100. So 97, not bad. So in the North America warehouse, we have a shortfall of about 1840. So we can ship the rest, which is 1774. 1774. If we ship 17, we still have a shortfall of negative 263. So we'll go to our branded production and maybe increase the production in certain areas. Here we have a maximum capacity of 9500. So instead of 8750, let's do 8850 and see. So 8850, and then we'll also add another 100 here. Instead of 5800, we do 5900. So 5900 also in the Latin America facility. Let's go back to our distribution and warehouse page. So we have an extra 98 in both markets, but this will still be low. So 1312 here, 1872, shortfall of 67. We still have to increase production, boost up production in these areas. So I'll prefer, let me confirm, like we have a shortfall of 67, so we have to increase, maybe let's increase our production by almost 200 in, so 59 here we have 6,000, and then instead of 8850 maybe we have 9,000 production here. Let's go back to distribution and warehouse, 98 pairs. So 31, and then 2020, surplus of 179. That's so much. Maybe what if we decide to clear some of our inventory? So 78, if we clear 25%, okay, that's not bad, because the margin over direct cost of this clearance is also a positive, so we can decide to settle on that on these decisions. A surplus of 70 is not bad, because this is the final round and I don't expect like us to lose our market share because of such decisions, so we can save on that. So next will be branded production facility, because I increased the capacity of the products that I increased the pairs manufactured. I want to purchase facility for our private label operations, like we have 240 and 2100. I don't think this will be enough, so maybe we can go to production facility. I think we have 950 here, so maybe we can purchase 250 in this market. And also another 250 in the Latin America facility. I won't expand on construction of new or additional space this final year, because it's our final year, so why should we be expanding on space? This space will take 1 year for complete construction, while the purchase of new production equipments is almost immediately. So next I'll go to, after branded production facilities, internet marketing. I think those decisions are fine, so I'll go directly to our private label operations. So let's say before I begin the private label operations decisions, so what we'll do, the SQ rating of private label pairs to be produce global minimum of a 5-star. We have 5.8 in our Asia Pacific facility and 5.4 in our Latin America facility, so that's fine. So I'll also zero in on the pairs to be shipped in the different areas. So the same the same strategy should apply in this section. So incorporation of the projected outcomes to the projection, you switch this to no first, in all the 4 market segments. So after switching them to 0, then I'll start, maybe we should satisfy the area first, so increase this to the maximum, so the max 1200, so we still have another 1200. Maybe we'll ship that to North America, so it's higher than the expected, right? So we can do 1,000, that's fine. We also have to satisfy Latin America first, so 1200 also. Then we satisfy Europe Africa facility, so also 1000. So before we set our price, I'll go back to our competitive efforts report and see what price proposals were made by our competitors. Like the maximum in North America is 52. The maximum in North America is 52, while for the in the last round we offered a price of 39.5, and we managed to sell all the products that we availed. Yet we had a competitor offering 49 and you managed to sell. Also we have another one offering a price of 51 and he was able to sell. So I think we can also decide to go with 49 because so we can earn more like the other competitors in the market. So, or 48, we'll decide to go with 48 in the North America facility. And then the next segment is the Europe Africa facility. So we offered a price of 41 and we were able to sell all the products, while our competitor offered 40, another one 50, 50, even 52 were able to sell. So maybe we'll also go with 50, 50 flat in this area, or maybe let's go with 49. I'll opt for 49, like we undercut them just a little bit. So in Asia Pacific, our price was 35 and we also managed to sell, while we had a competitor offering 50. I was able to sell another one 52, while the maximum is 53. So I think we'll also have to undercut with a price of 49 point something, our bid price. Then in Latin America, we offered a price of 36 and we were able to sell all our products. So we had others offering 50 and 52 and they were also able to sell their products, while the maximum is 56. So I think we'll also go with 49 point something. Let's go back to our decisions and make these decisions. So I think here we'll go with maybe 48.89 and then 49.62. So 49 in all the remaining market segment, 0.87. That's not bad because we are just trying to undercut our competitors, increase our price in this section so that if we are able to win the bid, then we can earn more. So 49.77, I think this will be fine. And then after that, we can switch to the projected outcome. Yes, in all the market segment, incorporation of these decisions in our year 20 projections. So that's fine. So celebrity endorsements, as you can see, our company E, we don't have any celebrity signed to our label right now. So before we make a bid, we can evaluate the FIR report, page 8, and see what is the price like. So we have Samuel Jackson to Chuck Norris. Let's see, Samuel Jackson to Chuck Norris. So the average in this area is about, the highest is 25 to about 16. So maybe we can decide to go with a price of 19,000 for all these celebrities. 19,000. So let's place a bid of 19,000 for all the celebrities. So because we want a maximum of 3, maybe we can set our maximum price at 60,000. Yeah, year 20 contracts at 60,000. So I won't set priority of on the celebrities that we want because I want to win them randomly. As per now, I don't have any celebrities, and this image somehow impacts on my image rating and I want to improve it. So I think we won't prioritize specific celebrities, we'll leave it that way. Then we'll go to corporate citizenship. So corporate citizenship is also important in improving your image rating, though it takes some years. And as you can see, I was the corporate social responsibility winner for year 19. So I don't think I'll change so much here, but maybe I'll drop the charitable contributions to 1% and leave the rest. Then finally, I'll go to the finance and cash flow decisions. The first decision to make in this area is to purchase the maximum stock, which is 253. So after that, uh, that's the maximum. We have dropped the shareholder equity to about 949.1 million for the projected year 20, which is not bad. But as you can see, I still have extra cash, 276. Holding such a high amount in my account is not wise. So maybe I'll decide to pay some loan, these two. So I still have extra 160. So maybe I'll offer some dividend. Let's see if we can offer $5. I think $5 per dividend, because that's not offering $5 per dividend for our shareholders and stakeholders is not bad. Performance on credit rating measures, so interest coverage ratio has increased, which is good. Debt to asset ratio has also reduced, and our risk of default is also low. So I think with these decisions, I've been able to achieve all the demands of our investors, because the earnings per share, the investor expectation was at 10, or we had 25.29. The return on equity investor expectation was at 30%, we had 47.6. A credit rating of an A, but we surpassed that to an A plus. They also wanted an image rating of 80, we have 84. So our net profit has also increased, the same to our net revenue, because the change from year 19 is a positive. Our ending cash has also improved. So I think with these decisions, we'll still maintain our top position, and that's it. So you can make an effort to like our YouTube and subscribe so that you get notified in case we post a new video.